Good morning, traders, and welcome to Trade the Structure and the Morning Jumpstart, the macro recap of the US session from Friday. So, as we know by now, the US had payrolls out, and the payrolls were actually better than anticipated. So, analysts, I think, were expecting somewhere around the 110 plus 110,000 mark, and it came out up 467,000. So, they beat expectations quite a bit. Now, the unemployment rate actually went up from 3.9 to 4%, which is a bit unusual. But average hourly earnings went from 0.5% expectations, and they come out at 0.7% up. So that's actually good for obviously earnings, but I would feel it's kind of inflationary as well. So it'd be interesting to see how that plays out. The US actually reacted down after that number from the open, so the numbers are at 12:30. The indices opened an hour later, and they initially went down, and they spiked down, found some support, and then pretty much rallied into the close until the final hour or so, which we'll look at in just a moment. So it was kind of a mixed session. I always feel a delayed reactions to these sorts of things. I think it's more than likely all this is inflationary. Jobs market is very strong. Inflation, people getting paid more, they're going to spend more, which would mean to me more inflation. You've got the bond market on Friday reacted a bit differently. Bond market, the yields spiked up. So after that number, they spiked up and they held on to those gains. US dollar started to find a bid as well, so that was starting to head higher. And that's all to do with inflation and what their expectations are. Whereas I would feel the indices actually ended a bit strange. So, and talking about strange, let's look at the ASX from Friday. So that was the action from Friday, which I feel is a very weird Friday. I thought this would be more choppy, be more well contained. Sort of kept. I would expect of that would be pressing into that 7,000 mark, which I was talking about the morning Jumpstart on Friday morning. I was talking about that. I wouldn't expect it to get out of hand, and it did exactly that. It gapped up on the open, spiked up into 71.08, and then that pulled back to retest sort of that opening area, and then finished at its highs. Well, near its highs anyway. So that to me was a very strange Friday, considering that we had the weekend coming. You had US payrolls, which were, everyone's talking about inflation. It could be capping this index rally. So it is a bit weird for me on Friday, but then you've come out on European session, got smacked back down, retested back into that area, even flushed it through 70.40, trying to close that gap from the Thursday night or Thursday morning close, or Friday morning close, sorry, before we had the rally on Friday. Tried to close that gap back into that 7,000 area, but failed. And that was when the US session opened, or late in the US session. That's early flush, and then bounced straight back. So for today, I'm looking to see what happens around the 71.08. Okay, if that's any indication, you would expect after that move and the US finishing quite strong. Well, in essence, they finished quite strong considering the numbers and everything, and that rally during the session. I would expect that to rally on, but that to me could get heavy around that 71.08. So you just be looking for either two things, or something off a lower high off that, or if we're going to bounce up and through a bit of a flush, then something like that. Otherwise, we could be heading south into that 70.40 area and even closing that gap and heading back down to 7,005. It is, be ready for anything. It is a bit of a strange market at the moment, but we'll see how today goes. Now, the Dow, you'll see, this was the open. Okay, it was somewhere around here. The numbers come out at 12:30, so that was a number. That candle there, markets sort of popped up on the Dow, come onto the open of the indexes at 1:30, an hour later, straight down. Okay, so they took off, went to the downside. They dropped probably about 340 points before rallying up to the highs, 500 points. So you can take what you want from it, but inflationary numbers after such a bullish run on all the US indices. When we're talking about a new cycle of interest rate rises, then I would expect that to start pressuring the market. But things like that, I think it's kind of, whether it is just buying into that dip, people buying into that support, mainly held up by tech, that sort of a bit of a spike higher, and then that late, flush down into the close. I think that's more intraday than anything else. No one really, buying off the lows, pump it up, and then selling into the close, take that profit and run. I don't think this is a major move on a daily basis, especially after those numbers, and especially the way the bond market's reacting. Now, the bond market is a lot more professional. Index trading, yeah, it's professional, but index trading is more, not index trading, but share trading is more one way. Okay, you're either buying or you're not really doing anything as a share trader. Okay, so they're looking for any opportunity to buy. whereas the bond market is more conducive to professional traders and the way they position themselves with regards to different cycles. And I think, generally when you're talking about an interest rate rise cycle, it cools the market at the very least, unless it's coming off some sort of low. But we're not. We're coming off some sort of high, a major high. Okay, overvaluation bonds become more appealing to major funds, so they might diversify out of shares into bonds, or stop buying shares at least, and put some money into bonds because you start to get that yield, which all to me starts to cap the bond market. Sorry, starts to cap the index. So we'll see. That's a Dow. Now, I wouldn't be surprised if this level holds at 35,330 tonight. I wouldn't mind some sort of lower high, bit of a flush up, flush some of these sellers out. If it can flush and start to hold a lower high, I'm expecting it to go through 34.80, or at least pushing down into that zone. Now, if it just starts to ramp up, and this is going to be a high low in here somewhere, like it might pop down and start to build, then that could easily push to 35,330, push up and through, especially coming into the US Open. It's going to be more, wait and see what happens at 1:30 in the morning if you're up anyway. The US S&P, the same sort of scenario, push down in the open, a bit of a flush down. That wasn't as bad as the Dow. It sort of held from 12:30 into those lows. Here we are, 12:30 in here, pressed into those lows, retested those lows, and just big ramp up. So that was a big ramp up during the session from about 3 o'clock, I think, 3 a.m. up until about 7. So 4 has just a straight up move. And then we backed off, like I said, 1 hour, pretty much dumped into the close. And like I say, I reckon that's more just that intraday positioning yourself, people getting long sort of through the support area. It starts to hold up, they get long because it has come off the last few sessions. They're looking for that bargain and then pumping up. Okay, but like I said, we'll see if that if it's just a tech, bit of a buying into tech. With Amazon did quite well, other tech earnings maybe coming out quite well. Looking to buy the dips, as we've been taught many times. But to me, that the longer term, we're still coming off the highs. We've come up into a key zone. We failed off that key level. Now, if we do start to fail from this 45, 44 area again and start to hold a lower high like this tonight or in coming sessions, I think we're going lower. Okay, that's why I'm looking at it. The NASDAQ, this level through here, 14,830, you can see again, popped up, failed into the close. That failed at 14,830. Whether there's going to be more of that and more continuation down is yet to be seen. Obviously, we wait till that US opens, but that trend is still down. I call that, like I said, RTF double top. You can call it a triple top if you want. Remember, this is only the 30-minute charts, but the daily charts are looking a bit weaker. That it's at that point where this is going to be a higher low. These flushes in here are going to support a higher low. When, if that's the respect, you just look for a move down and open, get supported again, and then we head higher, or whether we're going to sort of, some follow through momentum for that Friday move, we're going to sort of pop up and we're going to hold a lower high. Okay, so they're the two scenarios I'd be looking for. That lower high to me leads to at least a test of 14.43.5 and through this higher low straight off the bat and start to get supported at a higher level. I would expect to get up through 14.830. Okay, maybe test back into this 15.310 over time. But for me, that trend is still down. Okay, we're just coming into a good level up here. It failed off that level, big buying in here, straight back up, failed again off that, and it's just whether that's going to continue as a lower high, or we're going to find this as a key higher low. All right, Germany into Europe, they flushed down on Friday. Germany got hit quite a bit. Now they're talking up interest rate rises as well, so they're sort of reacting how the way I would have thought the market would react to rate rises. Unlike the US, we've got more inflationary figures, a stronger economy. Yeah, it's a strong economy, but a lot of that's been factored in. You've got to remember the market is forward-looking. It doesn't react to the numbers, okay? And the way the market reacted Friday, I think we're going to have this sort of late catch-up move in the US, say maybe tonight, tomorrow night, move down, okay? But yeah, we'll wait and see. The USD DAX, like I said, is powering down, looking for it to potentially push into that 15.015 area. We'll see. Bit of a bounce. Maybe this is going to hold a lower high and it's going to project down, or we're going to start to hold this level, okay, above this level. FTSE, that move up there, yeah, I think it's heavy for sure at 76.15 or that 14. This zone through here, these highs starting to fail off there. You can see these lower highs holding. If that's going to be another lower high like we've seen before, we're going to press through these lows. We're going to press probably into 74.83, maybe 74.50. Okay, that's what I'll be looking at for on the FTSE. Probably tonight, tomorrow night. Aussie dollar, powered down through European session. US dollar is getting supported And like I said before, US dollar sort of bouncing is holding a higher low, looking to ready to hold a higher low, which is not going to be good for the Aussie, not good for the euro, especially as US dollar starts to buy off those lows. Potentially, euro is going to start to fall over. So I'll be keeping an eye on the euro for a bit of a yardstick, and the euro and the yen as well, which we'll talk about in just a moment. Aussie heading south. Potentially, if it's going to hold below the 70.91, maybe flush into it. But I'll be looking for a more often than a sell, something like that, maybe for me. If not, we're just going to grind our way back up again and start to flush out a lot of these sellers through here. Euro, like I said, this is potentially a yardstick for the US dollar. Now, if that's starting to look heavy, which I feel it is, you've got a level through here, a key level up here, up at this, I didn't mark it up, at 114.80, thereabouts, this zone through here. Just see that's the high, failed off that high, powered down, bounced. Okay, if we get a lower high in here, I would expect a bit of a move down. Okay, we're going to get something like that, especially if the US dollar starts to get bought up again. And that, to me, is suggesting the US dollar looking at the price action is what's going to happen. So I'll be looking out for this for a lower high to work into a short. Okay, the pound is off this zone through here, 35.22. Pounds, I find, is more choppy than anything else. It did flush into that level, held, trying to hold a higher low off that level, maybe a bit more of a secondary move higher before potentially rolling over, because they're talking up. They just raised rates actually, so there's going to be a bit of love into the pound compared to the US dollar. So that may be more supportive. Even if the US dollar starts to head higher, it may be more supported than, say, the euro, for example. But we'll see how that goes. The US yen, now that's reacted up, okay, and we're holding higher levels. You've got this zone through here, okay, it's looking quite good. You've got higher level in here, RTF, fail, flush through, and then bounce straight up. So that was right on 12.30. So US dollar funds and buying, that was a payroll number, bounced up. We'll see if we can continue. I would be more conducive to think this was going to hold at 150.16. Okay, hold that level and rally. Okay, especially if this US dollar starts to find some buying, but that's what the yen to me is starting to suggest. There's going to be another leg up. Whether it's going to be this kind of thing, a leg up like that, which could take us quite a bit up to sort of that 116.34 mark. So there's a lot of fat if that's what's going to play out. That's the leg up, okay, and that's off that base through there. So double bottom, fail, move down, fail, press up, 1, 2, potentially back into these highs, which kind of matches up quite nicely. So yeah, I'll be looking for a long on that one. Gold, it's just messing with people in my opinion. You've got this grind up. Again, I've spoken about this many times. Don't be buying it because of inflationary pressures. It's not an inflationary hedge at the moment. It's not acting that way. It's getting belted around, I think, played with by algos more than anything, algorithmic traders. And that's 12. That's on the US Open. That was the US Open as well. So it's flush down in this 1790 area, 91. See if we can hold up here. It's very broad sort of channel and a very gradual move up. So if that's a gradual move up and we're buying because of inflation, why isn't it a sharper move up? You've got to ask yourself that. Why isn't it getting bought up harder? It's getting knocked down every time it gets to the top end of that range, like here. Potentially we're going to get a grind up today and get knocked down again. That's all I'm looking for. But I'm not looking for any big trade. I'm not looking for this big breakout at 1807. Hold your stop below and looking for it to charge up to this high at 1840 or so, anything like that. If it does, and you happen to get in along here, say you buy this breakthrough here, or retest of that 1807, and then you buy that extension back up again. If it just keeps going, fine. Like if you do get long, but I wouldn't be expecting that. Have a nice wide risk below here because it could easily just charge straight back down again. So gold, yeah, it's not for me at the moment, but we'll see. Just a couple of cryptos. Cryptos powered up on Friday, and they actually held over the weekend. I think they powered a bit higher over the weekend. Ethereum is essentially going sideways around this area, 29.47. Look, I would expect maybe we get some selling off that level. It might be a bit of a setup, held under those highs. We roll over today. We'll have to wait and see. But anyway, if I'm looking at this level, I'm looking for a lower high to sell into. When I see a flush up, hold a lower high and see if we can sell into and unwind some of these longs. Now, Bitcoin, much the same. It's actually a bit higher than that, I think, from the overnight action. Once we set that open, same sort of scenario. If I'm going to go long off that, I want to see a good move up, pull back, get supported at the level, and then start to go long. Okay, but if not, if we get it pop up and we start to roll, get some lower highs. If it's not going to continue on up from there, I'm looking for lower highs and unwind some of these longs. Okay, let's get to oil now. Oil's just been powering higher. We were talked about this here. We were talking about the momentum. If momentum's coming off and market's going sideways, good for a move up. Okay, and it's done exactly that. It's powered up. got into new highs. It's got into some key levels. Okay, powered above that as well, 92 to 93 area. It's getting a bit extended for me, but the trend is still up. This little push through here, how we've got back below the MA, as you can see for the first time. If that's the case and we start to get a bit deeper than that, we start to get something like that, then I'll be looking for short-term, intraday move down. But we'll see. Copper is also getting held, nice support through here. It's also getting a bit capped, into that area around 98, 92 thereabouts. This is the spot market, by the way, on copper, the CFD on it anyway. That we were speaking about being a lower high. We've got lower high, off this major zone here. We've got major support which held up, so it's kind of in its broad, very, very broad range at the moment. Okay, so to be buying it through that break, yeah, you're going to have your stop through here, and then you're going to know that it's probably not going to be a 2-to-1 trade, or potentially not. Whether you're going to look at that as your stop and then that as your risk. It's sort of more 1-to-1. Is it worth taking? It's up to you, but I wouldn't be looking at that just yet. Oops. So really, you see if we can get up through there. If we can hold, look for a little, something to minimize risk. Bit of a pop up through here, retest that level, minor lower, higher low, and then see if we can get it and extend up into these highs at 10.052. But we'll see. All right, guys. Thank you very much for joining me. Great if you could leave us a like and help us spread the word. And we'll speak to you again tomorrow. So just remember, stay safe today. See how the US or our market opens and see what happens in the US. Like I said, I'm a bit concerned. There could be a bit of a late reaction to that inflationary numbers from the US, the payrolls. The bond market certainly suggesting higher rates, potentially more rate rises. Now the RBA is also speaking up. They were talking up a long time. We're not going to rate rise until 2024. All of a sudden they coin flip, and they're talking up 2022. So is that going to cap us, or are we just going to look at growth? Yeah, there is growth when you're talking up interest rate rises to cool inflation, but the markets have been fairly strong of late and factored in quite a bit, in my opinion. So, yeah, we'll just see how we go. Anyway, guys, I'll speak to you again soon.